The markets are topsy-turvy right now, so bad news is oftentimes morphed into good news. So you see the daily U.S. markets go up and down, and it's all about what's the Fed going to do next.
Special coverage of the New Orleans Investment Conference is brought to you by Victoria Gold, leading Yukon's new gold rush.
Welcome to the New Orleans Investment Conference, SF Live special coverage. I'm Kai Hoffmann, the @JR Mining guy on Twitter and the CEO of the Soar Financial Group. And we're joined by our good friend Mickey Fulp, the Mercenary Geologist. Mickey, it's always great to see you.
Likewise, Kai, and it's been a while. Well, we've seen each other. It's been a while since we actually sat down and talked in front of a camera.
In front of a camera, exactly.
And I welcome that.
It's fantastic. You always have great insights. Always enjoy your views on things.
Well, I have a view.
Exactly.
To have an opinion, well, maybe I'm not. I'm articulate enough to express it, or as Jim Rome would say, have a take and don't suck.
I like people having opinions and sticking to them. That's why I love our conversations. Yeah. And Mercenary Geologist, last time we talked was in Vancouver. Like we caught up, we ran into each other in the hallway.
Yep.
And you said, I'm not buying anything, I've sold anything, I'm not really interested in this market right now, what I took away from the conversation. Has that changed at all?
Not really, although I'm making some feelers out there. But basically, I don't see an end in sight for the bear market in junior resource stocks. So I started selling bit by bit, very rationally as stocks would, as I could take profits, or if things have been beaten down for a long time, break even, spread that out over some tax loss sales at the end of the year. I started doing that. I started selling really during the big uptick in June of 2020.
Oh, wow.
So while everybody else was buying, I was selling gold stocks at 52-week highs because I kind of saw what was coming with too much money being raised, and we're going to be buyers once that stock became, or paper became free trading. In 4 to 6 months, gold price went way down, and it happened. So I haven't really been buying much since then. I think I haven't done a private placement for a year and a half or something like that.
Oh, wow. Okay, yeah. And you've always been big on private placements.
Yeah.
I remember our conversations in the past that you did a lot of private placements.
I did, but it's become increasingly difficult for U.S. residents, U.S. citizens to get that paper-free trading. It takes inordinate amounts of time to do that. So we can't sell after the 4-month hold, and by the time you get your stock cleared and be able to trade it, the bloom is off the rose a lot of times because all the other professional investors and some of the lay investors have sold into a rising market as that happens.
Way ahead of you, yeah. Absolutely.
Yeah.
You mentioned two things I want to follow up on. And you said you don't see the trends change at all right now.
Yeah.
What could change the trends? Let's be hypothetical here a bit.
Number one, I think we need a better price for gold. So this market is really historically driven by gold. Gold's at less than $1,700 an ounce, and that's over 15% off its all-time high in, what was it, August of 2020, and it briefly hit that in March or April, one day spike. I think when Putin invaded Ukraine or something, it went to 2063 or something, but it didn't stick. So that's the number one thing. But also, the world's in economic recession. I think that's a given, and I don't see an end in sight for the policies that are in effect right now: rising interest rates, central bank intervention, continued unemployment or employment problems in the U.S., and really the problem being that 38% of working age people are not working. Most of them still getting government handouts. So until that's all straightened out, and I think in the U.S. we need not only to continue interest rate rises, but we need to cut taxes, cut spending, cut the money supply, the old Paul Volcker model of 1981 to 84, and that's what needs to be done to straighten out the U.S. economy, and the world will follow. Until that happens, I don't see a real rebound in the junior market, because in a recessionary environment, commodities prices generally deflate, they go down. So, and we've seen that, Gold's off 15%, copper's off 20% or more off its.
I think we're trading $3.50 a pound or something like
Yeah,
that right now.
yeah,
so.
and so we were up to 484. So do the math. That's 20.
30, right there, that's like 30%, 33%.
Yeah, 30% off. And so the other metals kind of follow that. Oil's down right now because of fears of recession and demand. So you add all that up, and it's going to be a while, I think, before the junior sector recovers.
Yeah, definitely. Like the junior sector really went down the gutter at the first rate hike. So March 16th, first rate hike hit, and all of a sudden the stocks, like early March, we were still euphoric.
Yeah, so you use the venture exchange index as a proxy. I think at the end of last year, December 31st, it closed at 939, and I haven't seen it because we've been in this conference for a couple of days. It's around 620 right now, so that's 35-36% drop, and it's tough environment for juniors.
Absolutely. You said you're looking at some. You get your feelers
Yeah,
out. So I'm curious more like the commodity you're looking at, stage of development.
It's always starts with gold and copper for me.
Yeah.
So let's just leave it at that right now. For those,
I don't want any names. I'm just more like
for those two metals.
Yep.
And what I am looking for, are companies that are beaten down, that have tight share structures with really strong management ownership and good projects, and they're conserving their funds right now, or they're doing a small private placement to place some key individuals into it, and then we'll just sit and wait. So it's a matter of patience right now. I think the smart companies are probably, or some of the ones that I am fond of, are basically preserving their cash. They've either done small drill programs, they're holding off on doing big drill programs to increase resources, and basically said, we're just going to wait this out, because if we drill right now, we know we're going to have good results because we're expanding deposits that are increasing their footprint with a similar geochemical, geophysical, geology anomalies. But we're just going to kind of sit back and wait, because when we announce good drill results, we want to have a market that's going to respond to that, not become a selling opportunity for people like me who are selling things when we get a chance to do that. So there's a few of those out there, and there's probably a handful of those maybe at this conference that I'm taking a look at.
There you go. Two out of 80 or whatever the odds are to find what you're looking at.
Yeah.
I saw you walking around here yesterday as well, and you've been here now for, let's say, 24 hours. What are some of the buzzwords you picked up here at the conference? Is there a common theme? Like, is that one word or one recurring topic coming back?
I'll give you one. Bourbon at the bar in the evenings is pretty good.
That's true,
and you learn a lot by sitting at the bar with your friends and having a bourbon on the rocks, in my case, and
I've yet to do so, actually.
Talking to people. You know, this is a social event, and it's also an event where you get tips, and so I sit with my buddies and we talk about things we've looked at, and they give me some ideas and I give them ideas, and then you go and visit the companies and see what you think.
What they're up to, yeah. That makes a
So
lot of sense.
really, it's a bear market, and it's one of the deeper bear markets I've seen. You can make the case since the last bull market, which ended around 2013 as commodities started to crash, and other than about 6 months in the first half, or the first quarter to the third quarter of 2016, and then the run-up we had from the second quarter of 2022 to the end of 2020 or 2021. Pardon me. We've been in bear market ever since, with a couple of these blips where things just went crazy and all money poured in, and
we've raised a ton of money as well. Like, one of the questions I asked Rick Rule as well, like, we raised $6.7 billion last year for juniors. Massive amount of money. Second highest since 2011.
Yeah.
But we don't have much to show for it, I think.
No.
Do you think the money's being spent well?
A lot of it goes to G&A. And so, In a word, no,
Yeah, no.
not spent well.
Because there's not a lot of discoveries. There are not many that come to mind. A lot of brownfield exploration, meaning that's not true discovery. Yes, some decent holds, but nothing too exciting coming out. There's only one at top of mind right now that I'm thinking of that sort of excites the market right now.
Well, I think I know the one you're
Yeah, they're here at the
talking.
conference as well, right?
Yeah.
But other than that, there's not much going on, it feels like.
No, there isn't. And, we've lost the generalist investor again because the nature of our business. It happened in 2016. It happened big time in the spring, late spring to the fall of 2020, where the price of gold goes up, there's this boom, and these generalist investors come in. They don't understand our market. They throw money at everything, and price of gold goes down, the whole thing crashes as the private placement money becomes free trading, and those are pros that are participating, or at least
Warren clipping.
qualified investors worth $1 million net assets, and most of those people are smart about what they do, and we raised $3 billion during that period of time, and all of that, I dare say, most of that money just went up in smoke.
Absolutely. No, and maybe one last thing as well. Like 10 days ago, we've seen sort of a blip on the screens when the Bank of England had to sort of bail out the pension funds and issue some more cash, or inject more cash into the system. My point is, though, it seemed like the market wanted to see the Fed pivot as part of that, and all of a sudden gold was up $100, silver was up $3. The markets overall were green. Do you see that happening? Is that the same scenario we'll see happening?
The markets are topsy-turvy right now, so bad news is oftentimes morphed into good news. So you see the daily U.S. markets go up and down, and it's all about what's the Fed going to do next. And I hope the Fed continues to increase interest rates, because in my opinion that's the only way we're going to, that and a couple of other things the U.S. government needs to do, come out of this recession. Otherwise, I think this is going to linger a long time.
Well, Fed Watch Tool says 100% likelihood of increase, 86% I think is 75 basis points. So for November 2nd, which is still 20 days away, which seems like a very long time.
And I hope they stick their guns. I hope they follow the Paul Volcker model of 81 to 84. I fear that they won't, and they'll pull the Arthur Burns respond to political pressure, and that prolonged the recession. I mean, we were essentially in a recession in the U.S. from 72 to 79, and then we had this rampant inflation. So we'll see.
Now, I'm going to revert everybody to the conversation I had with Brian London, because we talked about the debt, like servicing the debt, and I thought that was a great conversation because you gave a presentation on it. Because $1 trillion in just interest payments on the debt. Because you want interest rates to rise. I get where you're coming from, and he's making the point. At some point, we'll hit a level where we can't actually service, or where the number gets astronomical. Well, you can always print more money, obviously, but the number will get astronomical, where you actually get political pushback that it doesn't make sense anymore.
Right, and so that's the old Arthur Burns model from the 70s. What do you do when you, and we're in a world of hurt about that. And so my idea, I'm a amateur Austrian economist, if you will, and in conjunction with, the way we got out of it in the 80s was supply side economics. And there's those 3 or 4 things you need to do. The Art Laffer, Larry Kudlow model and Paul Volcker, led by Paul Volcker. The problem we have now is the servicing the debt. We've got to get the money supply under control.
Print $1 trillion coins, I guess. I'm joking, obviously. Mickey, it was a great...
I hope not, my friend. Although if that happens, I guess our gold holdings are in nominal fiat currencies are worth a lot more.
Oh, let's not go there.
Yeah.
Let's not go there. Mickey, great conversation.
Right.
Thanks for coming and stopping by. Really appreciate it. And everybody else, thanks so much for tuning in. Follow Mickey on Twitter at the Mercenary Geologist and mercenarygeologist.com on his website, subscribe to his service. Fantastic, good commentary on what's going on. And follow us here on YouTube, follow us on Twitter, hit that like and subscribe button, leave a comment. What do you think of the conversation? What do you think of Mickey's comments? We'd love to hear it. And so much, and we'll be back with lots more. Thanks so much, we'll be back.